Now, this is a special. It's a flash update for you all, because I know that you're all interested in that special yellow fruit, the banana, for the banana zone. The banana zone is that point when crypto prices go exponential. And while we all love this and our hopes and dreams are all in that yellow fruit, I wanted to get everybody on the same page of understanding so you know where we are and why we're here. So I'm going to run through a selection of charts, many of which you'll never seen before, that gives you a much deeper understanding of what's going on and what we might be able to look forward to ahead.
The banana zone has officially arrived. Watch out for skyrocketing prices in the coming days. That's the latest message out from Real Vision CEO Raoul Pal. In just 1 week, Bitcoin broke past $80,000, climbing 17%. Pal believes this surge is no random event, but is actually part of a reliable 4-year cycle that's been unfolding since 2008. His reasoning is that as the US workforce shrinks, the government is printing more money to compensate for lost economic activity. This excess money finds its way into assets like crypto, driving prices higher. Though the overall economy may seem shaky, Pal argues that this moment is exactly when crypto can shine, with the huge potential for incredible gains on the horizon. Make sure to stick around until the end of the video as Raoul Pal breaks down exactly why he believes Bitcoin and other crypto assets are set for a historic rise. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now, here's Raoul Pal with the full breakdown of his analysis.
This is the important bit. The labour force participation rate in black here has been falling for a couple of decades. That is because the population is beginning to age, and so less people are in the workforce. Now, you can see in pink, it's the births-deaths rate that is actually driving this. So as population growth has been slowing, the workforce slows over time as people get older. Okay, so that's pretty clear. An old population, however, because of the magic formula, less people in the workforce means less GDP. So trend rate of GDP has been slowing. So the economy's been slowing over time. This chart is a chart you'll never seen anywhere else, and I think it's the single most important chart in all of global macro. So what is it? It's that same labour force participation rate, but this time it's against US government debt as a percentage of GDP. Now it's inverted here, and what it basically tells you is that as the labour force declines in size, or percentage of people involved in the labour force, the government takes on more debt to offset the growth. This is what it's all about. This is the big economic mess we're in. It's a mess created by demographics that I've talked about before. This chart is incredibly important. Now, look at the little divergence recently where government debt has been growing, but the labour force participation rate hasn't. That's the recent influx in immigration in the United States over the last 2 years, where some 6 million people or so have immigrated into the US, and that has kept the labour force participation rate higher, offsetting the retirees. But that's unlikely to continue, particularly with the new government. So what we'll see is the labour force participation rate decline and government debts keep growing. Okay, so we've got all of these massive debts. I've talked to you about the everything code. The everything code is the servicing of these debts by using liquidity. So liquidity is the debasement of currency. To service these debts, they print more money to service them. It's as simple as that. That is the game we're in. That is the everything code game. Let's talk about liquidity, because I think you've heard me talk about this before. It is super important. Liquidity keeps growing. That's the debasement of currency. It's growing at 8% a year. That means the value of scarce assets, S&P 500, real estate, gold, should grow at about 8% a year just because the currency is being devalued. Now, there's another maybe 3% inflation rate to add to this, so 11% is your hurdle for your future self not to be getting any poorer, and most assets just don't do it. But you can see how important it is by this chart that you should have seen before, which is the chart of the NASDAQ versus our global macro investor total liquidity. This is the total liquidity around the world. That's government liquidity, central bank liquidity, and private sector M2 and other measures. So it's the total amount of money printed by the system. And what happens is the NASDAQ is 97.5% correlated to it. That's incredible. The other extra bit that's not correlated that you're seeing now is the secular growth in technology. Because technology is a secular trend, because tomorrow is more digital than today. And obviously, Bitcoin, massively driven by total liquidity. This time it's about 87.5% correlated. Reason being, there's a faster adoption curve, exponential growth that happens in Bitcoin or all cryptocurrencies. So that's what lowers the correlation, is in fact the outperformance. But anyway, liquidity drives everything. Now, since 2008, everything has become cyclical, because in 2008, every central bank around the world reset interest rates to zero. It was like a debt jubilee. You don't have to pay your interest, so the world could kind of recover from the debt blow-up of 2008. And for about 10 years, we had zero interest rates. And what the governments did is they reset all of their debts to between 3 and 5 years. That cycle has created a perfectly cyclical business cycle. The ISM, the Institute of Supply Managers survey, what we've got here is in black is the current cycle, which is it's currently at its lows, but the forward-looking is actually just the previous cycle moved forwards and inverted, because it keeps repeating the same cycle. So that same cycle is repeatable and understandable and forecastable. Sure, the wiggles may change, the direction will be right. And it's driven by this.
The Federal Reserve has recently opted to lower interest rates to 4.5 to 4.75%, indicating a huge shift in the economy as inflation slows down. This comes after years of rising rates that have caused disruptions in markets, especially for stocks and cryptocurrency. But with rates now dropping, investors are feeling more optimistic. The S&P 500 and NASDAQ soared in 2023, with the S&P up 24%, and the NASDAQ rising 43%. This momentum carried into 2024, as markets reacted to the Fed halting rate hikes. Lower rates make borrowing cheaper, boosting the economy and driving stocks higher. This is a win for sectors like banks, real estate, and small-cap stocks, which have all thrived recently. Cryptocurrencies hit hard by rising rates are also bouncing back. The launch of Bitcoin ETFs has driven Bitcoin's price up, and Ethereum is riding the same wave. With rates set to keep falling, the future for crypto looks brighter. But it's not all smooth sailing. The uncertainty of how quickly rates will drop and the impact on the economy is still creating some volatility. Despite that, for long-term investors, this could be an ideal time to buy assets at discounted prices. As stocks and other assets adjust to the lower rate environment, now's the time to stay focused on your long-term strategy. After all, downturns can present great opportunities to pick up quality investments at bargain prices. Keep your cool, stick to your plan, and don't let market noise throw you off. Now let's go back to Raoul Pal as he discusses further.
This is the distribution of debt in the United States. If you look at the first two boxes, well, that's 72% of the entire debt structure is 1 to 5 years, which is what I talked about before. This is what's causing the cyclicality that you see in the economy and these 4-year cycles. So because they're using the liquidity to manage the debt, the rollover years, which tends to be this yellow and the kind of weird peachy color, the summer and fall, those are when the peak debt rollover happens. So they add lots of liquidity. So if you look at that, you can see the liquidity piling into the system as they start rolling those debts over, and they need to print more money because they have to issue new debt to pay the interest on the old debt. Sometimes they use a central bank balance sheet. Other times they just create liquidity, and it's done on a globalized basis. Right now, China's the big liquidity driver. And then you get those blue years, which are the winter years, when they start withdrawing liquidity because they don't need to service the debts because there's no debts around those periods of time. So that's why we get this cycle. And this cycle creates the Bitcoin cycle. It actually corresponds with the presidential election cycle and also the Bitcoin halving cycle. They're all those summer months. The summer months tend to be pretty strong. You can see the previous examples, 2012, 16, 20, all good months, all good seasons or years. And then fall tends to be very strong. The fall in 2021 was still strong, but it had a stunted cycle because liquidity was starting to get withdrawn because they put so much in. But if you look at 2017 and 13, they were gigantic. So the fun is yet to come. When you look at it in year-on-year terms, you can see the cyclicality and how related Bitcoin is to global liquidity and how the seasons dictate that. So what we're looking forward to is the big rises in price ahead.
Looking ahead, we're entering another strong period in this cycle. In fact, we're just getting started. The upswing could be huge, with Bitcoin and other assets set for huge growth, especially as liquidity keeps rising. So while we may be in the middle of a big economic mess, there's also a massive opportunity ahead. The game is all about understanding these cycles and being ready for the moments when the market takes off. The economy might be slowing down in some ways, but when it comes to scarce assets, the best performances may very well be yet to come. Stay prepared and watch this space. It's going to be a wild ride. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.